today's episode, we are joined by Ben Smith from Railsbank. Ben, thank you so much for joining us today.
Thank you very much, Kate. It's great to be here.
Why don't we start off by telling us a little bit about yourself and your background?
Yeah, thanks very much. So for those that don't know, I'm a passionate fintech professional with probably more than 20 years experience now across both startups, scale-ups and global multinational companies. I spent my time both in the UK where I was born and latterly Australia where I now live. I've worked for a variety of fintech companies, mostly in global payments and FX space, both on risk management and also streamlined payment processing, and also spent a little bit of time in card present acquiring, point of sale. Currently though, I'm the interim COO for APAC for Railsbank. I'm based here in Sydney where I head up our customer function for the region. Ultimately, I'm responsible for overseeing and strengthening our position here in the market with our partners, our customers and stakeholders, as well as making sure we've got the right commercial strategy for the region. I've actually been in Sydney nearly 17 years now, so pretty much a third of my career was in the UK and the most recent 2/3 here in APAC.
Basically an Aussie.
It feels like it that way. It don't sound like it, but it feels like it.
And can you give us a bit of an overview of what Railsbank has been doing in APAC over the last couple of years?
Yeah, absolutely. So I guess it's been an incredibly busy 12 to 18 months. So to try and distill it for the purpose of this, there's probably three main areas that we've focused on and had some achievements. Given that our growth and scale globally has allowed us to come into this region, the first thing that we've probably focused on is our people. I think at the end of 2020, we finished with around 15 people, and this year we'll be approaching 100. So significant growth across really all of the main functions that you could think of, anything from marketing to engineering, compliance, legal, customer success, sales, you name it, we've built it out. It's also involved a greater presence, excuse me, across Singapore, which is where we have our regional HQ, as well as increasing the teams and offices that we've got in Malaysia, Vietnam, and of course, Australia, which is close to my heart. That brings us on to the second thing that we've achieved, I think, in that 12 months, and that is that we've entered a new market, namely Australia. It was almost 12 months to the day, actually, where we announced our partnership with Railsbank, which triggered then the start of our journey here. And more recently, we've managed to get our AFSL, our Australian Financial Services License, which was another huge positive and a step forward as we start to take to market the capabilities that we've got around the rest of the world and bring them here to Australia. And then last but not least, customer growth has been the other area that we focused on. We launched our first, in fact, Australia's first BaaS customer, and have since launched Australia's first embedded finance business debit card linked to a deposit account. And we're currently working with a number of other customers to help them go live throughout this year. We haven't forgotten about Singapore. We've been consolidating our presence there, building out our capabilities and working with our existing customers to help them grow, as well as to work with the pipeline of customers that are continually coming to us to look at our services. So a busy 12 months, and if the next 12 months is as busy, it should be another good year.
Sounds like lots of growth so far.
Yeah.
You mentioned both BaaS and embedded finance there, and I thought what we might start with is what is embedded finance? What's your definitions? I see you read a lot on around both topics, and often they kind of get talked about in the same sentence. They kind of get spoken about as if they're one and the same. What's your definition of embedded finance, and how is it different to BaaS?
Yeah, you're absolutely right, and I actually love this question, so thank you for asking it. Even speaking with my colleagues over the past week, it's something that we think that should be asked more often, simply because it does get a bit murky in the market and media, and the terms are probably used interchangeably when potentially they shouldn't be. I think the other point to note is that these terms are often dreamed up by journalists and the industry to keep thought leaders happy, and that fundamentally they're irrelevant to the consumer. So they really are inward-looking industry terms, but we appreciate the fact that we need to kind of define things and keep things categorized. So I think the way that we view embedded finance is that embedded finance is the creation of a seamless customer experience, which incorporates a finance component or a finance capability. So we call this industry category the embedded finance experiences category. And I guess it can be thought of as the juncture where payments or finance capabilities and those components become intrinsically part of a brand's experience. And those components are then available through a set of APIs to truly embed them in that UX, in that experience that the brand offers. And so what it does is it allows more frequent access of the provider's product and a more engaged customer as they interact with those services. It's also a rich data source, so it can be plugged into decisioning engines and help with other things as well. The fundamental part here is it's not a clunky third-party module. It really is just something that is intrinsically inbuilt into the experience of whatever brand is providing access to that finance capability. If we compare that to BaaS, or banking as a service, really that's the domain of fintech and those fintechs that are looking to create standalone finance experiences. So think of neobanks or marketplaces, money management tools, fintechs that are trying to create a finance product or a financial product. They will use those capabilities, but to create a finance product, versus embedded finance, where you're taking those capabilities and placing them into a user experience that isn't necessarily finance related. BaaS also gets used to access payment rails, so it is just a bit of an industry specific term. Another term that often gets talked about in the same breath is white labeling, I guess, and I think that's probably very much older school, where white labeling is really just the rebranding of someone else's user experience, and so that comes with a huge amount of limitations as to what can be done with it. So as you go from embedded finance, which is the richest integrated experience, through BaaS and through white labeling, you'll see the differences, hopefully.
It's a good point about how we talk about this a lot internally within the industry, but to a customer, some of these terms maybe don't mean as much, or maybe don't change the experience as much for them. Yeah,
exactly. I think nobody wakes up to go and buy some embedded finance or wants a portion of BaaS after lunch or anything. It really is just an industry term.
Yeah, absolutely. And what are the biggest misconceptions about embedded finance? I know we spoke about the fact that it gets sort of confused with different terms, but are there misconceptions that you come up against as well?
Yeah, it's an interesting one. I think it's still a nascent thing. So I think a lot of it's still being understood, and people are creating new use cases for it. But I think one of the biggest misconceptions that we see is that embedded finance is about creating like a super app. Or it's not that at all. It's not about adding banking to an app in the way that, say, WeChat or the equivalent has added a banking capability. It's really around adding the individual components of banking, whether it's payments or creating accounts, storing money, spending money on a card, tracking payments, and so on and so forth, directly into that customer journey. So you don't need to create a huge super app to take advantage of embedded finance, nor do you need to have that super app to really provide value to your own consumers or your own customers. It's really about making a journey more engaging and more complete, and delivering the finance capability at the point in time that someone would be looking to use it, rather than having to go elsewhere. So yeah, I think it's really important to get across that it's not about creating a super app. It's more around embedding an individual component or multiple components into an experience.
It's funny that you say that, because when I was thinking embedded finance, APAC region, I immediately thought super app as well, and then started thinking, actually, it's a lot broader than that, isn't it?
Yeah, it really is, yeah.
And what has the success been of embedded finance in the APAC market? What are maybe some examples of the impact that we're already seeing from embedded finance? And I guess moving away from just the super apps, what are the things that maybe we don't think about as much in terms of how embedded finance is already impacting on customers?
Yeah, I think there are probably a few examples I could give. One's probably very familiar and often talked about. Another will be a customer of ours, and then another just an industry participant that's using embedded finance in an interesting way. So the first is Uber. I think probably people might have guessed that that's what I was going to go with, but I will try not to recreate horrors or nightmares for people who used to get taxis in Australia. But when I first came to Australia, it was a horrific experience. Taxis wouldn't turn up. I had been handed a physical map, a Sidways map, to direct the driver where to go. And also then when we got to pay, it was in a city, so there was tall buildings. It was on 2G probably at the time, if not 3G. And yeah, so the FPOS terminal wouldn't connect to the payment network, so we had to drive 200 meters down the road, had to pay for it, cars getting queued up behind the taxi, had to wait for the receipt. Just overall not a particularly pleasant experience. If you then look at what Uber did from firstly a digital first experience, they were able to actually look at what the user experience of hailing a cab and departing a cab should look like. And so they solved a lot of the problems there, the booking process, the knowing where the taxi is, But fundamentally, they also embedded finance. They took an embedded finance approach to how you paid for the taxi ride at the end of the journey. So it's now seamless. It's pretty much in the background. We don't really pay attention to it, but we know that the taxi will be paid for, and we know that we'll get the receipt, and the process will be seamless in that sense. So that's a really good, probably very familiar example of how embedded finance, or a component of finance, has been embedded and wrapped around the user experience. It really works well, and it doesn't have to be Uber. It could be Grab or any of the other ride-sharing apps that are out there. Additionally, it's also worth noting that it's not just the passenger, you or I, that get to benefit from this, but also the drivers. So in the older world, the drivers used to collect all of the FPOS chits and all of the receipts from their journeys, and they'd have to go to a cash office somewhere, queue up and get paid cash. In this new world with embedded finance, they get their own wallet within the app that gets paid immediately with all the fees deducted, and it's just a lot smoother experience. So it's actually beneficial for both the driver and the rider. So I think that's probably the most obvious one. Another example I can give that's probably not thought of, or not as well known, is one of our customers, Sing Life. They're a life insurance company, and if you imagine the usual engagement for consumers with a life insurance company is possibly twice: once when you take out the policy, maybe once when there's a renewal, and then latterly when there may be a claim made on that policy. So Sing Life's taken a different approach, and what they've decided to do is to try and create an experience that provides those consumers of theirs, or their customers, with a totally different experience. And so they've introduced a model whereby you can create an account with them. It pays interest, and more interest than the banks presently. You get a debit card with that account, and it's all performed digitally within the app. And the twist here is, though, that the account has an underlying insurance policy attached. So whenever that account, whatever's in that account, you're covered up to a percentage over 100% of the value as life insurance. And if you compare that experience, you've got consumers engaging with the life insurance product and company on a daily basis. They're getting a benefit to that account that they wouldn't get elsewhere, and they're not having to deal with paying premiums each month. So again, a really interesting and slightly different use case that you'll start to see these wonderfully creative methods of engaging with consumers and creating deeper relationship with consumers coming through. And a final example, if I may, is a company called Caro. They really have transformed the buying experience for buying a car. It's all done digitally for the most part, including the ability to get a loan processed to finance the car. So a whole car buying journey can now be done much more seamlessly and digitally. There's another company in Germany, I think, that does it, whereby you can have the excitement of going through the aspirational moments of test driving and choosing your car, something that people very much enjoy. And historically, the process of then getting a car financing loan to pay for it can be a little bit of a jolt in the process. It's either sat in the dealership's office, or having gone separately to a bank beforehand, or a broker to get a personal loan, or a car loan. Now that can all be done in a digital way, and loans can be approved in less than a minute, and the whole process gets transformed through that. So hopefully they give three different, slightly different versions of how embedded finance is operating here in APAC at the moment, but there'll be many more that come, and there'll be many different use cases that we'll see pop up for sure.
Yeah, I think thinking about all three of those are all really good examples of where the customer experience is enhanced. And I think we all spend our time sort of talking about banking and finance and payments, but for a customer, generally they don't really care. They don't really want to have that. It's just a pain point in that experience.
Exactly right. Yeah, exactly right. No consumer thinks, oh, I want to make an NPP payment today, or oh, I wish I did this payment this way. They just care that the money gets from A to B, or it's done quickly. It's the experience that really matters.
Yeah, it's funny you mentioned NPP, because we're talking about this internally this week, about how we kind of assume that NPP has delivered all these great benefits to consumers, and it has, but they're so disengaged because it's such a great process. It's so quick, it's so easy, that they actually almost don't realize that it's happening. It's just, well, why wouldn't my money move instantly?
Yeah.
That's just an expectation now. So yeah.
But I guess that's a sign of good technology in a way. I think I was talking the other day with someone about that there's so much technology in our smartphones even today, but really people don't care what Bluetooth chip it might have in it or what Bluetooth version it uses. They care about the fact that they can easily connect their headset or their headphones to the phone, that it works, it's simple, but really the technology just disappears. And so you can listen to your Spotify tunes, which are curated by Spotify knowing more about your listening habits, so you get a great experience there. You can listen to it through your headphones without having to have wires in the way. It just connects. And then similarly, so when you leave your lounge or your office and you head into the car, there can be a seamless connection from there to your car. And so again, consumers don't care about the technology; they just care about the experience. And the technology really should almost be invisible. And again, that's where we really see embedded finance making a difference, like Uber and all those other examples.
Absolutely. And I'm curious, so we spoke a little bit about sort of the super apps, and there's a lot of markets in Asia where we've seen really rapid adoption of fintech, digital payment services, WeChat, Alipay. Does that mean that a market like APAC is maybe more open to embedded finance compared to a market like Europe, or do you think are the barriers to entry different in different areas or different regions?
Yeah, it's a good observation. I think the main difference is that if you look at three main regions, and we'll talk about the US, UK, and Europe, and APAC. So if you look at US and Europe and compare APAC's a lot more fragmented for a start. There's many more disparate countries, cultures, different local payment systems, different dominant local players, regulators in general. I think you could currently say at least are more risk averse. So that probably sets apart the regions in one aspect. From a Railsbank perspective, we actually think this is probably one of our biggest opportunities, and that's that we can connect these disparate markets on our platform, which will bring a huge benefit to the Pan-Asian brands as they build consistent experiences to their users, without having to deal with those multiple standards and providers. But in terms of adoption, I think it's pretty key and pretty obvious from the reports that I think that you guys have even shared and some of the podcasts that you've had, is that digitally the consumers in APAC are probably more digitally confident than their European and US counterparts, and the adoption of mobile technology and the adoption of digital apps and the trust in those apps is probably a lot higher and a lot further along, especially across Southeast Asia, than it would be considered across Europe and North America. So I think on the flip side, whilst it's more fragmented and more difficult to necessarily create a same experience across all markets from a brand's perspective, I think the adoption rates will probably be a lot quicker, given that the digital capabilities and confidence that the consumers here have.
Yeah, I think that sort of tracks, as I said, with our research. If we look at just something like openness to open banking and willingness to share data in Asian markets, the willingness is already there, because they already kind of get what the value trade-off is, that if they give up their data or if they engage with these new providers, they get a real benefit. Whereas in markets, even a market like Australia, but UK and Canada and US, there's just more hesitancy and more maybe cynicism, I would say, about sort of newer providers coming into the market.
Yeah, absolutely. I think it's transforming, but absolutely the current state is that.
Yeah. You mentioned sort of digital readiness or sort of consumers' confidence with digital. I guess one of the key trends we've obviously seen over the last few years is just that rapid digitization that's been brought about by the pandemic. How does that change what customers are expecting from their financial services relationships? And what, I guess, opportunities does that present to different providers in the market?
Yeah, I think if you look at the market, we're pretty confident, and you'll probably be able to back this up, but that there's a clear understanding that consumers really are after simplicity, and they're also looking now for digital experiences more and more so, and further down the value chain as well, and with more complex products. I think I was listening to one of your podcasts the other day that was talking about the onboarding process, for example, at banks, and how people are getting much more confident with that. And then not only that, but their desire to take on more complex products without a person involved or an individual involved is also increasing. So I think that simplicity is key, and then digital first is also key. We also believe that customers and consumers, and this is probably more on the leading edge and the early adopters, they don't want banking products as such, but they want the finance to be available at the point that they need to complete the task and a task that they care about. So going back to the point earlier when we're talking about buying a car, you really don't necessarily want to have to go and buy a loan first and look at the product such as a loan and then go and buy your car. Ideally, you want to go and find the car that you want to purchase. And as part of that buying process, seamlessly, you can integrate a really efficient way to consume the loan. So I think that's another observation that will come through from the transformation as we get more into digital. Therefore, if you follow that through, I think in terms of who's best placed to take advantage of that shift, we fundamentally believe that it's going to be brands, so non-finance related companies, that will actually continue to benefit more from the shift as consumers want to engage more with them than they do with banks. So there's generally speaking, a higher customer satisfaction with brands than there are financial institutions. Brands and non-finance companies tend to know how to make their customers happy and what those pieces are. Partly possibly because they're unregulated environments, so there's a few different ways of interacting with those consumers, but regardless, the consumer is getting a much better experience and they're much happier with their brand than they would be from their bank. So if you overlay that, the ability to then incorporate those finance components and those finance capabilities into that brand experience at the point in time where the consumer is likely to digest it, then I think you'll see that that shift and that transformation will take place. So it comes down to a couple of questions. If you're a Formula One fan, for example, and you're off to the next Grand Prix, would it be easier and would it be more preferable to get your travel insurance from Ferrari or McLaren if that's who you're a fan of, than it would be to go and separately get it from a large insurer? Or similarly, getting that car loan, would you rather get it done in 40 seconds as part of the buying experience of the car, or have to go outside you and find a product provider to go and purchase it? So I think that's the shift that we'll see.
It's a really great point, actually. I think we spend a lot of time thinking about banks versus fintechs, and often we forget the role that brands play and the trust that they already have from customers. And the experience, they're already interacting with them. It's an addition to the experience, it's improving the experience rather than, as we were talking about, going to your bank to get a product, which customers don't necessarily want to do.
Absolutely. And I think there's obviously still a place for fintechs and still a place for banks, but fintechs will be able to probably be more niche in who they target. They don't have to have a broad swathe of product capabilities and servicing options. They can actually really target the sectors that they're looking to service. And again, with embedded finance or BaaS to support that, then they're able to take those capabilities direct to them. We just think the biggest transformation, the biggest shift will probably be in that brand space.
Yeah, absolutely. I think points to the importance of partnerships as well, which I think comes up again and again as sort of a key theme that we'll see more over the next few years. And so thinking about the events of the last few years and that digitalization and the rapid changes that we've seen in consumer behavior and confidence around digital, what are the specific opportunities that raises for embedded finance? Does that mean, or it sounds like you're saying it creates more opportunities, more willingness to consume those sorts of services?
Yeah, I mean, if we look at the last few years and what the shift has been there, it's been pretty dramatic. Just in terms of our own individual experiences, if I look back to a role I was at previously when the pandemic hit, we had about 40 to 50 people working in an office, and all of a sudden had to transfer from working from home. We had FX dealers and traders that needed to be talking real time to customers. Customers needed to call them. They were all based across Sydney or Melbourne. And so we were able to do that with using digital technology, using voice over IP and the digital technology that comes with that. That wouldn't have been possible a few years prior to that. So just the advancements of technology and how we're able to incorporate it into our lives has continued to grow. What the last 2 years has shown, I guess, is that the speed of adoption can actually be incredibly quick. When it solves for problems that you're actually needing to solve for, then people can actually quickly move into it. And I think people are probably now more open than ever to those digital experiences. I think Darren, our marketing lead for APAC, recently wrote a piece just on medical and health tech over the past couple of years, obviously in an environment whereby you can't go physically, or you're restricted in the most part from physically going to see a doctor. A load of digital health tech apps surfaced and allowed people to interact with their medical providers in a digital way. And if you look now at those digital providers, they're able to survive, and they're able to continue to grow their services to their customers. And if you can then fast forward that a little bit further, and if you can create a finance experience that's wrapped around those consumers, those individuals who are experiencing the digital health services, even if you have to go to the hospital or go to your doctor, you could still leave having seen your doctor and have the experience of the Uber payment, for example, where you're able to just walk out and have the insurance component covered, and then the balance paid by yourself. So I think that that digital adoption that's been accelerated over the last 2 years will see transformations at a faster pace than we've seen before, and I think that's what's going to open up the significant opportunities as we move forward. Education is another sector that was hit hugely by not being able to be in person. A lot of remote learning. I think it was very difficult for the industry, but they're now in a far better position to adopt digital first capabilities, and I think they'll just continue to grow.
The pandemic probably also shows us, I think, how quickly people can adapt when they really have to. I think we sometimes think it's going to take a long time to get somewhere, or customers aren't ready, but once you have sort of the framework put in place, customers do adapt and do move.
Yeah, absolutely right. And I think even simple things like for I don't know how many years now, but for a number of years, Australia has never really used QR codes for payments and everything else yet. It's been incredibly prevalent throughout Asia and Southeast Asia. And I'm not saying that QR code actually solves the payment problem we've got here in Australia, but now people know what a QR code is. They know how to interact with it on their phone. It again opens up another form of interaction. So you're absolutely right. The experiences that we've all had over these last 2 years, both in terms of what technology can do for us to help us in these situations, but also that it actually isn't as big a stumbling block or as big a hurdle as potentially thought, will just open up the velocity at which these things can be adopted, I think.
I can't tell you how many times we've been asked about QR codes. I mean, you look at Asia and how successful QR codes have been, and there's this constant question of whether it works in other markets. And yeah, I agree. I don't think it necessarily solves a payment issue in Australia. We've got contactless, which does that. But yeah, maybe it solves a different issue, and it obviously is solving one for us at the moment.
No, absolutely. And yeah, I think that's what it comes down to, isn't it? Does it solve a problem? And if it does, then it's probably got some opportunity to work going forward. But if it doesn't, then that's where the adoption will be a lot harder to take up.
Yeah, I always really like that idea of the right products will be ones that solve problems. We can sort of talk about things that are technologically advanced and things that are sort of fancy and new, but customers just want their problem solved for them. Yeah. You mentioned a few times that idea of finance sort of wrapping around a customer experience and being kind of an invisible part of that customer experience. I think that leads to, we often hear this prediction that banking is going to be disintermediated by things like embedded finance and DAS and open banking, that is just going to become a utility. I'd be keen to get your thoughts on whether you think that is one where we're headed, and then whether that is necessarily a bad thing for the financial services industry.
Yeah, I think it's talked about a lot. My personal view is that I think we are going down that path, truth be told. I don't think it's going to happen overnight, and I don't think that it's necessarily going to be as black and white as it's often discussed. But I don't think banks are ever going to be redundant in that sense. I just think the roles that bank will play will fundamentally shift. And if you look at what's changing now, and that's the distribution in this new world, which also affects the discovery element. So if consumers are starting to interact with their brands or fintechs who offer the finance experience at the point at the time that they want to consume it, then what point do the banks get involved? So banks, I think, will need to consider how their consumers are going to find out about their products, and whether their products stand up on their own as standalone products that people will actually go to them to get, or will they be best consumed, like we talked about before, in fintech or brands, user experiences at the point of time where they need to be taken on. So I think that's one of the biggest challenges. So banks will be, I have no doubt, asking the question as to how they're going to compete at that point of time where the finance component is needed. So how do they know when an individual, me or you, is going to go and buy a car and wants to get a car loan? Or how do they know where you or I are getting out of a cab and need to make a payment? These things just aren't known to the banks. So I think the banks are still going to be able to play their role as far as safe storage of funds, providing capital to the markets, creating balance sheets and lending support, and all of those good things, as well as access potentially to the payment rails and some of the capabilities. But I think as the requirements of the consumers get more nuanced and they're consumed at different points, I think that front end piece that the banks historically have led with, whether it's the online banking app or whether it's the bank branches, will probably start to become less relevant to consumers. So yeah, I think it will be. I don't necessarily think it's a bad thing at all. I think often we look at banking, it's 150-year-old industry, and I think the banks and the infrastructure will provide great support to the industry for many years to come. I just think there's going to be a shift in how consumers interact with the front end piece of those banking capabilities rather than the infrastructure.
Yeah, and I think banking is always changing. The way that customers interact with their banks today is so different, even to a generation ago. My mum still goes down to her bank branch and talks to the person behind the counter anytime she needs to do anything, but that's obviously not the experience for most people now. So I think sometimes we get caught up in a change that is coming without recognizing that it's a constantly evolving industry as well.
Yeah, absolutely. I mean, you can probably compare it to the music industry. If you think what iTunes did for the music industry through creating an end user experience, which was ideally wrapped around the consumer, digital first, access to millions of tracks. Yet the music industry still exists. It's just consumed in a different way. So I think what iTunes did for the music industry is a similar thing that embedded finance is potentially going to do for banking and finance.
I love that analogy, the iTunes of banking.
Yeah.
Sounds more exciting, maybe.
Yeah.
Maybe to a customer.
That's what, I think that's the point, right? It's about what's important to the consumer, the customer, whether it solves problem for them, whether it's delivered in the way that they want to consume it, whether it's delivered at the point in time that's relevant to them. If it ticks all those boxes, then it's likely to get uptake, and customers and consumers are likely to engage with a lot more, versus going into a bank and saying, oh, I need an account that does this or an account that does that. It's just different experiences.
Absolutely. Final question for you. What is your advice to fintechs, to incumbent providers with thinking about what the opportunities are for them in terms of embedded finance?
Yeah, I think it's probably come through the thread of our chat here, but I'd say think not about what products you can sell to your customer, but how and when and where your customers might actually want to interact with your products. And also think very very carefully about how they want to experience it. I think it's fair to say the finance battleground will no longer be on the high street real estate, but at the point in time that the consumer expects to experience it. So yeah, that would be my advice.
That's good advice. Well, thank you so much for your time today. And just to wrap up, is there anything you can share about what Railsbank's plans are for the next sort of 12 to 18 months?
Yeah, absolutely. Thank you very much for your time too. It's been great to talk to you and chat about this exciting world of embedded finance experiences and what it can create. For us over the next 12 to 18 months, I think you'll see us continue to build out our capabilities in both Australia and Singapore as we layer on more capabilities that we have around the globe and bring them to these markets. We'll also start to look at new markets in the region. So that'll be another exciting venture into new areas for us. And I think the other thing that you'll start to see is that we're probably starting to work in some new exciting industries. So just as we've talked about before, brands will be looking to take on embedded finance experiences. So I think in order for us to help those brands, you'll see us starting to, I don't know, look at the retail economies and the fan economies. So you'll probably start to see a shift in the types of customers that will be looking to partner with us to take their own capabilities forward.
Sounds exciting. Well, again, thank you so much for your time today. It's been great having a chat.
Likewise, thank you very much.